All right, everyone, here we are with ticker symbol WKHS Workhorse Group Inc. And before we jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. If you find value and you find this video helpful and informative, please hit that like button to let me know you watched this video, and it's the best way to say thank you and the quickest and simplest way. To all my subscribers, welcome back, and to you guys as well. If you find value and you found this video helpful and informative, please do so and hit that like button to let me know you watched this video. So Workhorse has actually had some volatility today, but it's hit newer lows, and as it was rising up, it just leveled back off to the new lows that it hit. So it broke through support, tried coming back up, it created a resistance there, and it's actually fallen slightly back down to where it was before it started to run back up. So the bulls lost traction fairly quickly, and here we are with Workhorse's new position. So we have obviously the new lowest point, which I want to really talk about and emphasize. As we see this is the new lowest point in the bearish run, and we're going to put the highest point where the bulls tried to recover. So let's look at this closely, and the 50-day moving average is so important right now. It's 1786. I'd write that down. As long as we're below it, the bears are in control. The moment we're above it, the bulls are in control. So for the bulls to reach that, which is their true goal, they need to break through that to get back into bullish territory. They need to break through the first resistance level. That resistance level is 1722. If the bulls can break through that, and we're currently at 1645, they can turn that into a support, break away from it, hit newer highs, reach new resistance levels, and work towards their goal of getting over the 50-day moving average back into bullish territory. So it's super important for the bulls to break through 1722, turn that into a support, reach newer highs and new resistance levels. Now, to all investors, I want to emphasize that if the bulls break through 1722, it does not signify that the bulls have actually gained possession. This just signifies an indicator for us investors on where this may be heading, and if there's a buildup of a momentum for the bulls to get closer to their goal to break through 1786 and turn that into a support, break away from the 50-day moving average in an upward direction, getting more confirmation of bullish territory. But before getting to any of those numbers, this is the beginning of the catalyst at 1722 and turning it into a support. Now, on the other hand, we have what the bears want. This is the lowest point reached in this bearish run. I want to emphasize that because if this breaks through 1625, this could be on its way down to newer lows, pulling further away from the 50-day moving average to newer support levels, and newer lows, right? Pulling away from the support and breaking down, pulling more into bearish territory. So it is super important for every investor, and I want to emphasize this, to pay close attention to how this stock is reacting, if it breaks through support, and how quickly this is hitting newer lows. Because the behavior will tell you who is dominating the chart. Are the bulls trying to reappear and bring this back up, or are the bears dominating this, pulling it further away from support, creating a resistance here instead of a support level, and breaking away from it and pulling it away further away from the 50-day moving average, deeper into bearish territory, confirming new lows, and much more possession and control over the chart from the bears. So it's really important to pay close attention to the behavior of how the stock is reacting if it breaks through 1625. As always, if you found this video helpful and informative, please do so and subscribe. And don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watch this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points And by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.